Hey all, welcome back. My name is Adam Jason. I am the founder of BRRRRinvest.com, and my mission is to help you guys to find the wealth and financial freedom that you're looking for through the BRRRR strategy, through the information that I give you both as a BRRRR investor and also an attorney with clients in the space and having done deals using the BRRRR strategy for about a decade now. Today I want to talk about I think a relevant topic for today and something that some of us might be thinking about as we look at our portfolios and what's coming down the road. And I think the question is now a good time to be selling some of the properties that you have in your portfolio? I think we're currently, as I make this video, sitting in a market with some interesting market conditions that are occurring that are at least worth considering and making the decision about what's best for your portfolio. So if you have some properties that you've been sitting with for a while and you're thinking about, okay, is it time to exit these and move into some new assets or change the asset class a little bit, I want to talk today about some considerations I think that, again, that you should at least be pondering and wondering if it's in the best interest of your portfolio. So let's talk about some of the market conditions that we're sitting in and how those might impact your decision. I think the first thing that people are seeing in the market kind of undeniably across the US is rising home prices that start to make it look attractive, whether it makes more sense to exit a property and potentially deploy that money that you make into something new. I think an important consideration when thinking about, all right, is now the right time to sell? Have I made a good return on my money with this property? Is it the right time to move into something else? Is really a consideration of looking at what is your current return on equity in your property. So just to give that a little more color, the analysis really is, okay, how much money in rent and cash flow am I getting in comparison to my return on equity, and how has that changed over a period of time? And in particular, how does that look now in this current market versus how it did even just a couple of months ago? So to define return on equity, just to put this in a little bit more clearer terms, return on equity is going to be basically the cash flow difference compared to the amount of equity that you have in a property. So just to make it super simple, if you have $50,000 of equity in a property and you're making $500 a month in cash flow, you're gonna have an annual return on equity of 12%. So that sounds great and is something that I think a lot of investors will be targeting and be comfortable with. But as these home prices continue to rise in the market, you have to kind of, I think, take a look and see, is that number still attractive for your portfolio and for your goals? Or could that money better be tapped into and rolled into another project where you could get back to that 12%? So with these increase in prices, if your property has gone to, let's say, $75,000 in equity and you're still making that $500 a month in cash flow, you now have a return on equity of only 8%, which might not be as attractive to you. It's still a good number, but you can see that as that starts going down, you may have potential to take that capital out of this project, put it into something else, and get yourself back to that 12%. The unique market condition that we have right now, and debate the validity of it or the financial intelligence of it, but frankly, the fact of the matter is that Americans just love debt. And when we see these below 3% interest rates, below 4% interest rates, the people who are driving up the cost of the homes, in addition to the fact that there's limited inventory, are those who are willing to kind of sacrifice true market price and pay more for properties because of the fact that debt is so cheap right now. They're not spending money on other expendable items, trips, etc., and are willing to put more money into a limited pool of homes and capitalize on that cheap debt that's available in the market. So our thirst for debt as Americans and are willing to take on a lot of debt and pay above market prices for properties when that debt is available is really driving up the price of homes. It's good if you're an investor and you're sitting on properties that you are considering selling. especially if the properties that you're going to sell are homes that somebody would potentially live in. I think a lot of people who are driving up these prices and buying these homes and taking on these new loans are not really interested in fixer-uppers, or they want to buy properties that they can see themselves living in and moving into. So depending on the assets that you have, the properties in your portfolio, if they fit that description, now might be the time to really be able to get an above market price, because you have so many people with this thirst for debt and are willing to take on these loans and drive up market prices. One thing, of course, always to consider when you're thinking about, okay, should I sell, is what am I going to do with this money when I get it back? It doesn't make a ton of sense to sell, take a bunch of money, and then have to hold on to it because the market is so high that there's no real chance to find opportunities, or it's more limited than you might like it to be. The market that we sit in right now is, and nobody of course can predict the future, but it's interesting to think about what kind of opportunities are going to be coming. You know, with the COVID epidemic and the situation that we're in right now, the unemployment position, the limited funding for state and local governments, it's very possible that if things aren't kind of government backed, that you're going to start to see a fallout in homes and things becoming available and foreclosures and bankruptcies. So it kind of sets up a unique market condition where we're potentially on the precipice of super high prices, where somebody could sell a property now, make a good return on their investment, and be a little bit cash rich. And we could be seeing, again, you know, we don't know for sure, but we could be seeing that fallout in prices, which sets up for opportunities to buy in the near future. So it's something to think about. You should definitely be kind of tracking your return on equity throughout the life of a property. Make sure it's meeting the goals that you want, or trying to redeploy that capital into other assets. At BRRRRinvest.com, we provide all the analysis tools that you need to be able to run that math, see if your portfolio goals are being met, look at your entire portfolio on a comprehensive basis, make sure all your goals are being met and you're getting the returns that you expect. I wanted to make this video just to get the juices flowing and make you think a little bit about, okay, what's best for me? I know I'm doing it in my portfolio and looking some numbers and starting to say, now might be really the time to exit, as I just see these prices skyrocketing and people willing to take on more debt than ever before. So think about it, see what your portfolio looks like. Come visit us at BRRRRinvest.com. We offer a free trial, lifetime access, one-time payment to our BRRRR deal analysis and legal solution, where you can find all the tools and resources that you need to be analyzing deals, renting to your tenants, signing with your contractors and property managers. Leverage my experience and all the tools I've built over 10 years of doing this. And I thank you for being here today. Leave your comments, subscribe. Interested to know what your guys' goals are for your return on equity, if now you think it's a good time to sell, other things that you're seeing in the market that might be relevant to other investors as they think about this question and make decisions for their own portfolio. Thanks so much, and I'll see you in the next video.